would just, like to, first of all, give you a warm welcome to, this special 8th episode of Emkay Alpha Mavens, which has been conceptualized by Vikaas and Sachdeva, who is CEO with Emkay Investment Advisors. And this is a very special series, and that is the reason I thought of personally coming and, moderating this along with Vikaas and Sachin. I will give you a brief introduction to PMS AIF World. PMS AIF World is a digital platform for providing wealth management services to HNIs, and it specifically focuses on PMS and AIF products. Now I will move on to, first of all, introducing our prominent guest, Mr. Samir Kaul. Mr. Samir Kaul has been my ex-boss. I have worked with him in Citibank because, I have worked in Citibank for more than a decade before we set up this platform, PMS AIF World. Samir, brings with him 23 years of experience throughout in Citi. He has worked in Citibank in multiple roles, from operations to product to mortgages to setting up the insurance distribution business. And he was heading branch banking business, and then he also headed Citi Private Bank for 9 long years. I remember when I used to work in Citibank, it was our aspiration to join Citi Private Bank. That aspiration could never, get fulfilled. And that is how maybe I ended up becoming an entrepreneur to fulfill my aspiration doing private wealth management on my own. And now, I will move on to introducing Vikaas M. Sachdeva, who is CEO with Emkay Investment Advisors. Vikaas, again, has more than 2 decades of experience, comes from commerce background, and passionate about investing equities. And, he has been leading teams for more than, 15 years throughout his career. Before Emkay, he was part of Edelweiss, and under his capable leadership, Edelweiss could actually do, one of the biggest deals of acquiring JP Morgan asset management company. And he has also had an opportunity to work with a well-known, firm, which is Enam Asset Managers. So here at, Emkay Investment Managers, I have seen under Vikaas, we have done these 7 episodes so far. But besides these episodes, there have been many other initiatives which Vikaas have been taking, and which have actually led to Emkay building their name and also acquiring a lot of clients and assets over last 1 year. Lastly, Sachin Shah. Again, I actually got to know about Sachin when we started Emkay Alpha Mavens. And the more I have known him, the more, I would say I have actually liked him because of he being, coming across as very ethical and very, very honest fund manager. And fund manager who actually, brings with him a lot of academics. He is, I would say, partly fund manager and partly an author of, originating one of the frameworks, which is by name Equal Framework, which actually determines the risk before investing into a business. So we will understand, a lot from all these 3 guests that we have today. And this particular show is a show actually designed with a very, I would say, fine idea. We have been doing a lot of shows with fund managers because fund managers are basically money managers. And we did that very successfully for 1 year. A lot of investors appreciated that. Vikaas and I were chatting, and Vikaas actually, said that ultimately we want to add value to investors, and investors seldom meets fund manager. Investors actually, throughout his experience meets with the wealth managers. So along with fund managers, we should also do talk shows. We should also do knowledge series with wealth managers. And that is how, we have been organizing one of the other wealth managers from this industry. And today we have, I think, one of the leaders from this industry, Mr. Samir Kaul. With this introduction, I give it over to you, hand it over to you, Vikaas. Please take it over from here.
Thank you, Kamal, for the generous introduction. First things first, considering that I have a jinx in terms of technology, I hope that I'm audible, I'm visible. If I'm not, then I would probably switch off the camera so that I'm at least audible. Am I audible and visible to everybody? Yeah? Okay, great, fine. Thank you, Kamal, for the kind introduction. I think one of the other things which I would like to mention is that the audience has been more than receptive in terms of sending us questions. And please do continue sending us questions throughout this session. The best question is going to win a prize from Finland Trading Academy, which is one of the premier institutions in terms of training and development in trading and investment in this country. So, Kamal, I think you were talking about industry leaders, and I was just smiling to myself when you said that you could not get across in Citi Private Bank, which is where you became an entrepreneur. I'm just thinking that if you join Citi, you become a leader. If you don't join Citi, you become an entrepreneur. So it's a win-win situation either way, as far as Citibank goes. But you already introduced Samir. I think what I am going to do is, as always, some personal insights on Samir Kaul, the person behind Samir Kaul, the professional. Samir, with your permission, I'd just like to start off.
Sure.
Yeah. So I spoke to a few of your colleagues, I spoke to a lot of your friends, and more importantly, I spoke to a lot of your ex-colleagues. And I think some of the adjectives and sentences which are like common throughout is A, you're unflappable, B, a man of very high integrity, and C, you will get things done. This is something I got across the board. In fact, if things don't get done, people have told me that you will roll up your sleeve and get it done, but you'll make sure it gets done on time. You have immense clarity of thought is what I've been told. In fact, to the extent that you are in the camp of either you are convinced, either you have to be convinced, or you will convince the other person. There is nothing in between. And to that extent, there's a lot of data, logic, which you apply to the hypothesis you work on. Amazingly, or rather not surprisingly, you have a photographic memory. And I'll tell you the reason why. I finally found out the reason why you have a photographic memory as we go along. This actually intimidates some of your colleagues because apparently you can remember a decimal point in a table in a presentation made months ago. So they're very, very careful when they talk to you. You love to work late nights and usually are the first one to come and last one to go. And if I can take the liberty of using a statement here, the city never sleeps. And I guess that is for everybody who's been with Citi. In terms of your personal traits, you're a complete family man. Mrs. Kaul is a homemaker, and Sunana, your daughter, turns 19. Siddharth, your son, turns 17. You're a very doting father. You also have a Cocker Spaniel, Simba, which your whole family dotes on, but you personally take care of him. You love reading. Loving reading is something which I'm not surprised at. But what I was very surprised to listen is you're an effortless speed reader. You can actually devour books by the dozen. So it's a lethal combination. You have a photographic memory, you can devour books. So, that's quite unusual. Your weaknesses. You're a foodie, essentially a foodie. So in no particular order, charts, chocolates, and Chinese food is something which just gets you going. You're an essential foodie. And one of the reasons probably why you have such a photographic memory is because you have a very strong weakness for almonds and nuts of all kinds. So, that's something I made a note of. I need to up my almond intake. You love golf. You've traveled across the world with your golf buddies, playing across some beautiful golf courses. In fact, very surprisingly, when I actually asked people, you say that Samir is unflappable, but there must be something which gets his goat. They said, yeah. Anyone who comes in between you and your golf, you're not very nice to them about it. Last but not the least, one of the things you insist upon is, and what gets your goat is if there is indifferent business communication and or if people are not addressed properly with the right nomenclature. So I think that is something you're very, very particular about. So that's pretty much about Samir, the person. And I think we should just get started with the session. So Samir, some of the questions which are coming through and some of the things which we have, considering the topic bulge bracket versus boutique, you're one of the few people who've actually migrated successfully from a bulge bracket firm to a cutting edge boutique firm. What do you think from your vantage point, one has to be mindful while undergoing this cultural change?
Okay, can you guys hear me?
Yes, we can.
Okay, first of all, thank you, Kamal, and thank you, Vikaas, for the kind introduction. I'm not sure I'm deserving of all the adjectives you use, but I think thank you so much. I think it's also good to have industry representation other than the fund management side, because I think distribution plays a very key part in terms of making these products available to investors. I think in a market like it is today, I think everybody thinks they are the smartest fund manager. But we have seen this over the last 25 years that, there are these cycles and people start to, I would say, appreciate the quality of the process and the quality of the individual when the chips are down. because everybody is a star when the chips are up like it is right now. I think because the advantages of a large entity is the brand is very strong. I think generally the processes are strong. I think there is a large base of clients which exists. So when you start to kind of, and of course there is many firms have a certain culture which they insist people follow. So when you try and transition to a smaller entity or to a boutique, I think what is important is that you have people working with you who first of all are self-starters, because at the end of the day you will only go as far as you think you want to go. Maybe in a larger organization there are processes and systems and people pushing you, but I think when you go to a setup which could be your own or a smaller setup, then you really have to kind of take charge in terms of what you want to achieve. The second important thing is that you have to set the right culture, because in many organizations people may come from different backgrounds and they may have their own thinking in terms of what is right and what is wrong. I think one of the things that I have learned through my own experience, which I would like to share, is that you spoke about integrity, right? I think that's something which is a cliche in our industry, but actually integrity is a bit like common sense. People think that common sense should be common, but it's not very common. And I would say that as far as integrity is concerned, in the wealth management industry, not just in India but globally, people think that's a non-negotiable, that's a starting point. But what is important is when nobody is looking over you, right? What are the processes and the steps that you take to ensure that the quality of the sale, the quality of the interaction, the quality of asset allocation, product suitability, all of that is taken care of. And that, I think, is the most important difference between a large firm with established processes versus a smaller setup which is just trying to become relevant in the years ahead. So I think these are broadly, I would say, things that one should watch out for. Obviously, a smaller setup is more agile. They end up becoming more contemporary, like you've seen in the Indian setup in the last 12 or 13 years. But I would say these are the kind of broad differences that one should look for.
Interesting. My point, you did mention about integrity, but if I have to look at it from a cultural point of view, the culture of a big bulge bracket firm and the culture of a boutique firm, one is more process oriented, one is more entrepreneurial oriented. When you were migrating, when you were making that change, was there something which you were mindful about, which you thought, this is just something which might be useful to a lot of people who keep making changes from one firm to the other? What should they be mindful about?
See, like I said, I think when you were working in a large setup, then everything was process oriented and everything kind of fitted a certain bill, right? Now here, if you have the ability to sign a check of any value, if you have the ability to approve any product, if you have the ability to write a client communication the way you want it, I think the responsibility is several notches higher, because like I said, especially depending on what level you enter at, the buck has to stop with you. And if you lower the guard, right, all hell can break loose. And if you set a very high benchmark, then you can have the same standard in terms of integrity and process and governance that you would expect in a larger firm. So I think that is the most important, I would say, element when you make a transition.
Interesting. So according to you, what would it take to become a successful wealth manager in India today?
I think the most important thing which most people don't understand is that you have to be patient. Okay, if you are a RM, you have to be patient that somebody will try you out and then give you money depending on how you perform. I think you have to ensure that there's longevity in terms of your own outlook. Like the joke I used to make with the RMs at Citi, and Kamal may be familiar with that, is that we were selling 5-year, 10-year products. And in those 10-year products, the client was there, the fund manager was there, but the wealth manager had changed 3 jobs. right? So the fact is that when you actually go and sell long-term to the investor, I think you have to have a long-term orientation yourself, because otherwise, in this business, the products can be copied, right? But the individual, their culture and their outlook cannot be copied. And I think that's a soft differentiation that can differentiate between a successful firm and a not so successful firm. So I think the product platform, all of that is kind of pretty staple in terms of parameters to think about in terms of being successful. But I still think that making people understand that this is not a 100-meter race. It's actually a long-term play. I mean, I have made the transition now after 23 years in Citi, like Kamal said. I knew many people since 2007, 2008 who were clients of ours at Citi. But I would say that people have not made an automatic transition just because I made the transition, right? Okay. They have their own association with the brand. They have their own association with the way things are done. And that's why I think the expectation has to be that this is a long-term game. You have to play the long-term game. You have to have long-term orientation. You have to understand the clients. I think people take, especially in India, because, I think, Vikaas, the certification standard, while it's improved from what it was in 1995, the certification standards for wealth management is still very basic, right? Unlike, say, a Series 7 exam in the US, right? So people end up getting into the business saying, okay, this is sometimes people think it's like a get-rich-quick scheme, right? That, okay, I'll go and sell this PMS and this AIF and I'll make 3% and 4%. That's actually the worst way to run this business in my view, right? Because that shows that your orientation is very short-term and you are expecting the client to have a long-term orientation. So I think the right business model, the right culture, having the right set of people and having a long-term orientation, in my view, are critical aspects of running a successful wealth management business.
Interesting. Sachin, I'm sure you also have a few questions to ask.
Sure.
You go next.
Yeah. Sure. Thanks, Vikaas. And hi, Samir. Thank you for coming on the show. Samir, I was just thinking that, from an investor's perspective or from your client's perspective, right? Today, as a client, I may have an option of either going to a large wealth management firm or I would say an institute kind of a firm, say like a Citibank, or to a boutique kind of a firm. And as a client, maybe I'm thinking that if I go to a large firm, I might get lost because it's all so much centralized. They will just follow the typical processes. Whereas if I go to a boutique firm, maybe it will be much more personalized, customized. How true is this notion? Since now you have been on both sides, maybe you can give us a sense that from a client's perspective, how is it different? Is this notion right, or it can actually be well balanced?
No, I think the notion is right, because at least from the Indian investor's perspective, my experience has been that investors are very brand conscious in India, not just in financial services, but in general, right?
Okay.
So when they think about who they are doing business with, if you have a big brand behind you, then it makes it easier to do business. If you have a smaller brand or less recognized brand, it takes longer. Also, the big difference, Sachin, is that with smaller boutique firms, individuals tend to kind of define the brand and the experience more than the brand per se, because the brand is not so well known. In the case of a big brand, whether it's a multinational bank or what have you, the people associate a lot more with the brand and they come because of the brand, and of course there are other reasons they come. So I think that notion is fairly accurate. But if you look at the most developed wealth management business in the world, which is in the US, I think what has happened, it's taken some time, but there has been a value migration away from the big banks to independent firms as far as wealth management is concerned. And I think I can see the same trend, developing in India. If you see now, most of the large foreign banks are becoming less relevant in terms of wealth management as we go on. The domestic players have taken over, the domestic banks or the domestic boutiques. So the same value migration is happening here as well. And I think that has to do with the fact that once people get into these kind of setups, They see that the product set is more contemporary, there is more flexibility, the culture is more entrepreneurial, right? They can look at building this like their own enterprise and what have you. And I think that's what's going to happen in India as well.
But just taking that a little forward, can a client or as an investor take services from both? Say, for example, I may be associated with a large brand and also with a personal customized boutique firm. Does that work? And where I'm coming from is, say, for example, my requirements are like such. So, like, for example, as a customer, I may want to invest in global markets. So only a large brand will be able, will be facilitating me for that kind of things. Or say, for example, if I want a large loan book or I want a bank line facility, a boutique firm may not be able to do that. Whereas certain advice is only possible with a boutique firm. So does that work, or it's very difficult then?
See, I tell you, there is no one size fits all answer. For example, if you are self-employed and you have a banking relationship with a bank, and the bank is doing a good job on cross-sell, they will try and make sure that whatever money you have in your personal capacity or any excess that you have within your corporate is also deployed through the bank because they're providing credit, and there's nothing wrong with that. I think people who are investors who don't have this kind of need for affiliation and the need for other banking products probably are more open to the idea of going to the boutiques, right? But I think increasingly what is happening is that people, Sachin, are looking at least 2 to 3 different firms, either because the firms provide unique ideation, or they just want a second firm to be independent in terms of providing or guiding them in terms of advice. So I think I see now people telling me I want one large organization and one boutique organization as my wealth partner, and that's the way forward.
So will they use the boutique firm more for the vetting what the large organization is doing, or the other way around, or is there 2 independent investments that they would do with each of them?
I will tell you again, I can only speak from my own experience. I can't say that's the generic nature of large versus small. But I think today we could review an idea and say, okay, does this make sense, and turn around the idea in 24 hours. So let's say, prior to the Zomato IPO, we reviewed the IPO, we made a decision in terms of which way it should go from our perspective, and we were able to articulate to our clients. If you were doing this in a large organization, you would have to go through all kinds of approvals and this and that. And by the time the IPO got over, you would get your approval saying, okay, now go ahead and have a conversation, right? So I think that people are looking at the boutiques for quick turnarounds, for ideation that may not be available with larger firms. Larger firms tend to follow a very protocol-driven, product approach, saying, okay, these are approved asset management companies, these are approved PMSs, AIFs. So I think you would probably end up getting, as an investor, a lot more ideas from the boutiques, and that's the reason people look at adding them. Depending on the quality of the boutique. Now I'm also seeing in a few of our cases, for example, where we are asked to give a peer review against a large organization in terms of their review and their recommendations. So, but from the client perspective, it makes sense to have at least 2 points of view.
Sure. That's helpful. Thank you. Vikaas.
Kamal, would you want to, I think you've been running some polls. I see some interesting results. Would you want to talk about that?
Absolutely. So, while I have been hearing, Samir sharing his views on the topic, I ran one poll asking our audience that, which is the preferred structure amongst large wealth management firms, MNC, multinational or domestic bank, or thirdly, big boutique independent firm. 50% of the people have actually voted in the favor of boutique independent firm. Only 8% people have voted in the favor of multinational or domestic bank. And 41% have voted for large wealth management firm. And this brings to me, this kind of reminds me of another question, which Vikaas, if you allow, I will go ahead and ask.
Please go ahead.
So in 2016, when I was kind of thinking of exiting Citi and moving on, I actually had all these 3 options in front of me. From the perspective of taking ahead my career, And at that point of time, Kotak Private Wealth, which is the large, I would say, large domestic bank, or IFL Wealth. But I actually went ahead and interacted with Mr. Rajendra Kalur at Trust-Plutus. That is how I know Trust-Plutus. And ultimately, I ended up doing something of my own. But I would want to understand from Samir. Today, he is leading Trust-Plutus, which is the boutique independent firm, and that is the area of kind of my liking also. And that is why I shared all this context. How does Samir, how do you feel when you are now leading Trust-Plutus, having seen your history of having worked for 23 years in Citibank? I absolutely see that you will be here for the next 1-2 decades. Maybe this is the last career, and you will kind of you will create something which will become very big over a period of time. I believe that. So obviously you will apply your learnings, but this thing, a boutique independent firm, how will you onboard, for example, somebody like Emkay Investment Managers? Point number one. So if you have to onboard any product, what are the criteria that you will look forward to, and how will you compete with things like Kotak Wealth, companies like IFL Wealth, and how will you kind of build your name?
Yeah, I think the first thing is, Kamal, that when you think about this whole, like I said earlier, also about the transition. If you ask me, and this is again my personal answer, that when somebody says, "Where do you work?" I tell them I don't work. I actually enjoy what I do, and I think it's really something which I would like to do for as long as physically I'm able to do. So I have told people that stop asking me where are you working. Well, I'm not working. Okay, I'm actually enjoying what I do. I think one of the things that people have to appreciate is that when you have that kind of approach and that kind of attitude, that's the only way that you can actually build a long-term business, because then you are patient. And like I was answering an earlier question from Vikaas, that patience is a virtue in this kind of business. Most people don't understand it because many people are trying to get rich very quickly. And that is unfortunately not the way that this business happens. And the reason is that if your approach is long-term in nature, then I think you will set the right processes and then you will follow the right processes to make yourself successful. Now, when it comes to the question you asked about approvals and that process, see, at the end of the day, there was also a discussion I think I had with Vikaas yesterday, that when you are in Rome, then you have to do as the Romans do, right? You cannot be operating on your own. Now, traditionally, we started out and we said that we will just be fiercely independent, open architecture, and basically focus really on doing the right thing for the client. When you ask the question, Kamal, in terms of competitiveness, in a certain segment in India today, people now are looking at firms like us for unique ideas. Because frankly, if I go to them and say, okay, there is an Emkay AIF, or there is an ASK PMS, or there is this, Motilal fund, either they already have the product or they have 10 other managers who have the same product. So the value that somebody like us can provide in that situation is either limited or non-existent. So for a certain segment of the client, we actually now have our own ideation, right? So while we say that we will remain open architecture, we also now have our own asset management company for the last 7 months. But less than 5% of our AUM is our own product. So that shows that, how open architecture we are as of now. But what is important is, to answer your question on processes, is that we have a certain framework that we follow. And that framework is actually always tested in a bull market, because there's always client feedback and there is a tendency for people to say, listen, it doesn't matter if XYZ is a first-time manager. It doesn't matter whether he's never managed this asset class. I think he will do well. He made a great presentation. These are things that we have to run away from. These are things that we have to avoid. And we have to look at the person who's managing his or her experience, the culture of the organization that he or she represents, what is the value that that particular idea will add in terms of the asset allocation? Can we be relevant for the asset management firm? I do remember when Vikaas was in his Inam days, that there was a time that Inam said that, listen, unless you can raise a certain minimum quantum of funds, you will not be relevant for us, which is fair from their point of view, right? Because they also don't want to have too many distributors. So I think the process has to be very consistent. The process has to be driven very tightly. There is always tendency, Kamal, to lower the filters when the market is at 16,000. But I think you have to be consistent and then make sure that every manager, whether internal or external, goes to the same direction.
Right. While you were talking, the results towards boutique independent firm have actually increased from 50% to 67%. Over to you, guys.
Thank you, Kamal. Samir, I think both Sachin and me, if we're looking a little distracted, it is simply because we're taking notes while we're talking.
No problem.
I am actually enjoying this, and I think the penny just dropped when you said, I don't work, I enjoy work. I've been trying to explain to people at times, I'm not an entrepreneur, I'm an intrapreneur, I'm an entrepreneur within the company, etc., but nobody seems to be getting it. I think I'm going to just borrow this phrase. The next time somebody asks me, where do you work? I'm going to say, I enjoy my work. I really enjoy that. Okay. So my next question to you, and incidentally, we're getting some very, very high quality questions in the chat box, and I'm actually looking forward to asking you some of them. But on to my next question. Of late, one has seen specialized wealth management firms actually originate and create their own specialized alternate products, and work on exclusivity as a business strategy. You did mention my ex-organization, or sticking to a process, but this is something I find intriguing. Do you think a closed-end structure like this is actually beneficial for the client?
Okay, I think when you say closed-end, you mean that proprietary ideation.
Proprietary ideation.
Yeah, not in terms of the tenor of the investment product.
No. Thank you for clarifying. It's proprietary ideation. Yes.
Yeah. So I think I made this point about when in Rome we have to do what the Romans do. I think what has happened and with some of the larger firms is that I think there are two factors, honestly speaking, which are driving this whole proprietary ideation. One is that people accept you if you have a differentiated offering, because third party, especially above a certain cutoff of wealth, has become fairly commoditized. And the second thing, Vikaas, to be very honest, is that over the last, I would say, since 2009, there is this thought process with our regulators that distributors are making so much of money that you should start to do what the Chinese Communist Party is doing with the ed tech sector in China, saying that, listen, we make sure that nothing is left on the table, right? So I think compared to 2009, the spreads have actually come down dramatically, and that is the reason that I think it's forcing every firm, to be very honest, which has the capability, saying that it's also very intuitive and ironical, because that today the investor gives you more respect if you are managing money versus being a wealth manager, right? And they say, okay, fine, if you want to charge X%, you charge because this is your idea. But if you get MK's idea, the first question is, okay, what is in it for me? Why should I go through you? Why can't I go through XYZ? So that is the reality, and I'm not saying that's the reality in every segment, but that is a reality above a certain threshold. What you may qualify now as UHNI or ultra high net worth and what have you. So I think that it is not to blame people for having the so-called closed architecture. It is just that that's the reality in the marketplace. Now, some people have taken it too far, where probably your 90% of your business is closed architecture, right? But from their perspective, because actually it is working, because clients are buying my idea. Secondly, I end up making more money. And guess what? In an industry where attrition remains a risk, today if an RM is working in a particular setup where he or she has largely sold proprietary products, even if you decide to move on, the client remains with the firm because their investments are with the firm.
Yes.
So the movement of assets away are rather limited. So from a business perspective, actually, it's quite smart.
Interesting. So it's like if you have custody of the client's asset, not the little word custody, but if you're holding the client's assets, the client is with you rather than with.
That's right. That's right.
Excellent. While I was talking to a lot of people, and I said that Samir Kaul is going to be our next guest, and we're talking about Trust-Plutus. A lot of people actually know about trust. There's a lot of brand salience about trust in terms of its positivity and the sort of achievements it has had through the years. But I think a lot more people want to know a little bit more. What does Trust-Plutus Wealth Management bring to the table? What's your focus? What's your forte? What are your future plans? So if you don't mind just sharing a few things, I think there'll be a lot of clients who will be interested in knowing more.
No, I think thank you for the kind note. I think the group has been around for 20 years. I think I call it the mothership is well known, right? All the children are like tiger cubs. They're running all over the place trying to kind of find their own footing. But I think now over the last 20 years, we have a full asset management business, both in terms of equity PMS, which we don't market to resident investors. We are also got our mutual fund license, and the mutual fund was launched in January of this year. We, of course, have the wealth management business. We are in the process of launching our first mid-market private equity fund with a focus on sustainable, responsible investing. So I think that from a financial services perspective, other than banking, I think the group is pretty much into many products and services. I think in terms of what is our focus, Vikaas, I think our focus is to move clients in India away from the traditional distribution model to a more advisory-led model, because we strongly believe that that model eliminates the conflict of interest, it makes the relationship product agnostic, and it makes the relationship transparent. So you know how much you're paying. There is no interest for me if I was pushing XYZ product, and then that eliminates any kind of conflict in the way we manage money. I think that is really, I would say, our focus in terms of what our plans are. You talked about this point I made about not working but really enjoying what I do. When people come to work, I tell them, you're not working here. You have to basically think like an entrepreneur. We want to essentially enable an entrepreneurial culture where if Kamal said, okay, listen, I want to join you, I would say, listen, you are joining as an entrepreneur. I will give you the platform. I will give you the support, but essentially it's up to you in terms of what you want to do. Now, I will explain to you that, again, India tends to follow a developed market like the US in many things. I think in the US now, this has been the trend for maybe 40, 50 years, where you could be an independent financial advisor, you're associated with a big brand like a Smith Barney or a Merrill Lynch. You use their platform, but it's basically your customers. And then you do a revenue share with the platform because you're sharing their platform. And then you build your business, and then the next generation could be in the business. Your friends and family could be in the business. That's the way. That's the way I think even India will graduate. The big difference is that when you start off as an IFA, maybe they give you 20% as a fixed compensation, and everything else is variable. I think India has still not graduated to that point where people are willing to live with a lower fixed and a higher variable. But I think sooner than later, even India will go in that direction. So we want to essentially create a business model which is entrepreneurial. Our focus is that we will give you the platform. We will have an open architecture platform. But the most important thing that we can do is that we can essentially have a very strong culture to kind of help you manage the relationship. And last but not the least, one of the people who signed up with us as an IFA recently sent me a message yesterday saying that the quarter has ended and the clients will be paying the fee, I think by say 10th of August, right? So I told them the day the client pays the fee, because that is our source of revenue, the same day I will pay you to make sure that you get paid. And I still strongly believe that culture does not exist, where people are paid on time or people pay people on time. I'm not talking about salary, I'm talking about when you get into an entrepreneurial relationship. So our focus is to basically build this kind of culture. And we are hoping it will take some time, and we are very patient. It will take some time for people to understand that if this is what you want to do, then, like you said, Vikaas, the moment people really understand what it means that I'm not working and I'm really thinking like an entrepreneur and I'm behaving like an entrepreneur, I think this business will take off.
Very well. Sachin?
Right. Yeah. So, Samir, again, from a client's perspective, we have seen in the western part of the world, as you were just giving some examples from there. What the large wealth management firms used to do with some of the large ultra HNI investors. Now they are taking those products even to the smaller investors by way of small units. They're breaking up that large into units. But do you see that trend coming to India also? Samir, I can't hear you.
Can't hear you, Samir.
You can hear me now?
Yes.
Yeah.
Sorry, I think that you will see some amount of digital disruption, especially with people being able to create multi-asset portfolios that you can access. So far, what we have seen is that while people are happy to have digital interface in our business section, but they still want to see you face-to-face. So, for example, for the last so many months, nobody obviously was meeting face-to-face. Everything was happening digitally. But the first opportunity that people have got to meet face-to-face, they're telling us, listen, I don't care. I feel uncomfortable doing business with someone who I've never met. So please come and see me in person. And we are seeing a lot of requests now coming from people to meet in person. So I think the answer to your question is that there will be digital options with multi-asset solutions that will allow people to break it up into smaller ticket size. But I think over a certain kind of threshold of wealth, people would feel comfortable not dealing with a machine, but dealing with individuals who can emotionally understand them, which a machine cannot.
Okay. Just one more thing that I would like to understand, and this is one thing which I always personally grapple with as a fund manager. When we go to the investor, or even to that extent, I would say some of the wealth managers also, they will ask us our track record in terms of our performance. And when I showcase them my track record in terms of our performance, they will always counter that this other fund has done much better than yours. And then I always struggle to explain the risk-adjusted return for the risk that the other fund would have taken or the other portfolio would have taken compared to the risk that we would have taken. So this risk and return are two sides of the same coin. How do you address this? Can you explain this in a more simplified way? Because explaining with the ratios, the Sharpe ratio and all of that becomes very technical for me to the end investor. But how do you manage this at your end? Explain that having the best return is not the right goal. Probably having the balance or the risk-adjusted return for your profile is probably a better way of looking at things. I'm sure you have had these challenges. How do you address that?
Well, I think first the most important challenge that we have, Sachin, is that when the markets are bullish, right, people forget about risk. And the fact is that when the markets are bearish and they should be taking more exposure, they are actually worried about this.
Right.
So I think that is something that you have to kind of address with people in terms of, and the thing is that I keep again joking with our people that most of the clients I come across, they want the highest return and the lowest risk.
Yeah, absolutely.
And today, that is actually playing out in the fixed income market because rates have gone down significantly, as everybody knows. So how do you graduate from a tax-free bond to a REIT to a bilateral market-linked debenture to taking more risk? And people say 5% is too low. Well, it's a very relative answer. But the question is 5% is for a certain kind of risk. And like you said rightly that people underappreciate risk when they actually should be appreciating. So I think that's a constant challenge. I think I would be lying if I told you that we have managed to fix the problem. Because comparing, mutual fund disclaimer says past performance is no indication of future. But for all investors, past performance is the only indicator of the future, right? So you have to explain to people, and I think that's why I said patience is required, because people will keep throwing this at you. So I think we try to tell them that the whole traditional model of asset allocation, diversifying across managers, not getting into too many products which lock in your liquidity. I think those are sensible things to do. And I'll give you a good example, Sachin, of risk, right? So like Kamal was kind enough to talk about my background at Citi. So I was actually responsible for setting up the insurance distribution for Citi in the year 2000 when insurance got privatized. So I remember I was one of the few people to do an insurance seminar at the CCI in Bombay in the year 2000. So customers used to come for these investment seminars traditionally to have a good time. They used to have some speaker who would talk about making a lot of money. They would enjoy their drinks. They would enjoy good food. And here I stood up for the first time talking about risk. Talking about deep vein thrombosis and talking about cancer and heart attack and whatever. So people came to me after the session saying, "Boss, this is a Friday evening, right? You should be talking about the good things." But I think I did a good job because I made them aware of the risk, right? Even today, when we tell people at 15,800, 15,900 that you can never time the market, but you can always buy protection today in India. Many people don't think that protection is required because they say every day the market's going up, it's fine, right? So it is very difficult still for people who are not, I would say, investors who understand risk really, to make them understand how protection should be an integral part of covering your risk. So I think every day is a challenge, Sachin. I don't think I could have given you a answer which tells you that we have solved the problem. But that's part of our kind of mandate to make people understand. I would say that in India still, I think India is, many people said many things that, India, this thing won't happen. For example, people said investors will not pay a fee in India, but investors are starting to pay fee in India,
yes.
right? So by the same logic, I think people will start to appreciate risk. Okay, they will start to buy protection like they do in a market like the US, and then you don't worry about increasing your bets or placing your bets, buying equity, as long as you do that by buying protection on the downside. So I think we are trying to impress upon people. So far, we have not been very successful, but we'll see. I'm hoping over the years we can convince people.
Sure. Thanks for such a frank response.
Yeah.
And Samir, I must also say that thank you for also reaffirming some of our beliefs. Like I and Vikaas also keep on internally discussing, and I always keep on telling him, investing is all about patience. So and I always tell him it's not only about being patient after investing, but you also got to be patient before investing. So that's a very important thing that we always try to follow internally. And what you mentioned today actually really reaffirms our beliefs. Thank you so much. Appreciate it.
Thank you, Sachin.
On a lighter note, I think, in fact, I have a question before we move on to the audience questions. But on a lighter note, you use the word patience so many times. I'm just reminded of the fact, in the initial years when I was into mutual funds, way back in '95, when Morgan Stanley and UTI Mastergain were ruling the roost. So my boss told me, Vikaas, you have to be very patient, because if you're not patient, you will become a patient. If there is no money to be made, you will be asked why no money is being made. And if money is being made, you will be asked why enough money is not being made. So you have to keep your cool all the time. That was very well explained. Thank you so much. In fact, my last question to you before I just move on to the audience question is, I don't know whether it's a little premature to ask this question, but I'm still going to ask it. In India, this wealth management industry is a relatively new concept. We're still talking about a lot of evolution which is happening, which is likely to happen. Yet it is highly fragmented. Do you think that there is going to be some consolidation which will happen in the industry, or is it too early to talk about that?
No, I think you are already seeing in the last few years that there is, like I said at the beginning, that in the early years of wealth management, I think the foreign banks were very large distributors, I think with the passage of time, they are becoming less relevant. You've seen some of the corporates who also had wealth management businesses as part of their non-core operation. They are hiving off such businesses. So I think consolidation consolidation can happen in many ways, Vikaas. I mean, consolidation can happen where you buy out a company, or consolidation can also happen when you start to take people from other firms. But I think it will keep happening. It's inevitable. I think the stronger firms will become stronger, and the weaker firms who don't have the patience, who think that, see, when you translate from Excel to reality, right, all the assumptions can turn on their head. And that's when the patience comes into play, right? Because sitting in my room, I made some assumption, okay, somebody will give 1,000 crores, but if they end up generating 100 crores, you really have to be patient with these people. So I think there will be consolidation, and the stronger players will get stronger.
In fact, one of the things I personally believe in is that if you're a firm which doesn't have a strong narrative, a strong USP, if you can't explain in one line, one sentence, why do you exist for the customer, chances are that you might not exist for too long.
Actually, that's a very good kind of lead you gave me, because if you see our tagline for Trust-Plutus, we say it's wealth management with a conscience. And like I said in the beginning,
wonderful,
that integrity and consciousness is something which I personally feel people may not think that there is merit in terms of using these parameters to differentiate. But I think in the long run, these are the factors that differentiate between a good firm and a not so good firm.
Very well put. So I'm just going to be moving on to the audience questions, unless Kamal has something to share in terms of the poll results. Kamal, with your permission, can I move to the audience results? Audience questions?
Hello?
Yeah, Kamal, can I move to the audience questions, or do you have any poll results?
Yeah. Sure.
Okay.
So actually, I think, I have been getting this query from the audience that the screen is not visible to everyone.
Okay.
Are you guys able to see the screen?
Yes,
we can see. Yes, it's pretty good.
Okay, please.
So Sandeep Singh has actually asked a question. I think it's a question at a very fundamental level, and I'm going to be very interested to see how you explain this. He says that I work with both large banks and wealth management. The intent there is more of trying to be product churn boutiques somehow seem more real. Basically, he's saying that I find a lot of realism or somewhat a human touch, if I can read Sandeep's question right, in a boutique rather than a large bank wealth management firm. He says, I'm not sure why. Can the panelists explain?
Well, I think, let's take a step back, Vikaas, and look at it that everyone who has worked in a large firm will kind of understand what I'm saying, that when people are career-minded and they're working in a large firm, your outlook is your next job, your next promotion, right? Your next geography. In the wealth business, actually, those qualities are all detrimental to your career, because people are expecting you to be in the same job. They don't care about the title and the same geography, right? So I think people who have done well in this business are people who have actually got longevity on their side. And that longevity, understanding the family, understanding the next generation, understanding their priorities, growing with the family, that is what is the strength that the individual and the boutique firm can provide, which is not so visible in a large firm.
Excellent answer. Excellent. I think that does explain quite a bit. Vikaas Kothari asks, how is the wealth management as an industry coping with the revenue pressures, as most ultra HNIs are opting for advisory services or direct plans, because of which margins are getting thinner?
Yeah, I think that's a very good question. The way that wealth management firms are dealing with revenue pressure is that, first of all, you have to kind of embrace the change. I think if you remain in denial, then you will not be successful. And then you have to change your business model in line with what the revenue model is. So people who then walk into my office wearing cufflinks and saying I want a very fancy salary, I tell them that our experience has taught us that you are probably better off working somewhere else, because frankly speaking, our business model will not be able to sustain this kind of cost. So I think that, somebody mentioned to me a long time back that the Indian wealth management business or the industry, the costs are like a developed market and the revenue is like a developing market.
Very well.
Right? And that is what you have to overcome if you have to run a successful business.
Very interesting. Very interesting. So Ravi Parab actually asks, what made Samir sir and Kamal sir move to boutiques? I think you explained some part of it, but this question still come back again.
Well, I would like to say that probably if one of the regrets I have is I should have moved long time back. I think maybe I delayed the move for too long. But like I said, I think the entrepreneurial opportunity, the flexibility, the ability to execute quickly, I think those were some of the parameters that I was looking at when I made the move. And I think I've been kind of very lucky that I'm working in an ecosystem which is very mature, which is very long-term in its orientation, and working with people who have the same kind of cultural outlook to business that I have. So I think I've been very fortunate.
In fact, Kamal, I think I can probably answer for you. You should have applied for a job to City Private Bank a little earlier, right?
I would actually.
Yeah, please go ahead.
I would support what Samir has mentioned. For me also, I also believe that it is very courageous of Samir to actually admit that this move has actually taken a lot of time. This move should have actually been taken much before, maybe in early 30s, and it is basically, I think, the mindset of an individual which evolves over a period of time from being somebody working for an organization or working on entrepreneur. And that is I think which takes time. But the sooner one actually learns to work like an entrepreneur, the better it is for that individual to work for the role of a wealth manager. Because role of a wealth manager actually can be done very well. Because as Samir mentioned, the two most important qualities of a very good wealth manager are patience and longevity. So patience and longevity can only come if you think like an entrepreneur. If you do not think like an entrepreneur, these two qualities cannot come. So I absolutely agree to whatever Samir has said, and absolutely insightful.
So there's a comment here. It's not really a question. I think Jayant Kumar and Samir Vadana are pretty much saying the same thing, that corporate governance, even quote unquote trust, is a huge issue in India, more than organization in the wealth management business. Because I think people still believe that these products are being sold rather than clients buying them. And it's across the board in terms of large and small wealth managers. So this is just a comment which is coming. It's not really a question. And there is a comment on how expensive some products are, like PMS, etc. There's a question from Amar Kampani. This is a very interesting one. As Indian HNIs and family offices start moving towards alternate assets, what is your view on assets like Bitcoin, wine, art, etc.?
Yeah, I think that first of all, we are not dealing in many of those assets that Amar has mentioned at the moment. But I think in India, what has happened is that the public markets have done so well that people have seen so far historically little need for looking at alternative investments, right? And prior to this bull run, I think even the alternative investment asset classes had not done as well compared to public markets. I mean, if you look at the data point and you had bought the high quality Indian companies in the year 99, 2000, and you had held on to them and you had created an equal weight portfolio, I think you will be sitting at a CAGR of 17, 18% right now. Right now, that's tough to beat. I mean, you're sitting with companies which are high on governance, high on quality, highly liquid portfolio, and it's given you great returns. So I think at this point in time, the alternative set of products that investors are seeing is probably in the private equity side. And as we know, in the last 1 year, a lot of value is getting created in the private markets. probably the private markets are a lot more expensive than public markets. So I can see some of the sales pitches now in public markets saying, listen, the Nifty is not expensive, at least it's not as expensive as the private markets, right? So you should buy public markets versus buying private markets.
Interesting.
But I would say that I think that we have seen this in the last 25 years, that there are cycles, and every cycle you see the same kind of investor behavior. That when the chips are down, they are really down. When they should be buying, they are selling, and when they should be selling, they are buying, right? And then what happens is that people, like right now, I think a lot of investors I see, they've actually let their guard down. They've seen so much of paper profit that people are saying, listen, if an idea is half credible, I'll put some money, right? So I would say that to answer Amar's question, that we currently don't have any solutions for many of these alternative assets that he talked about. The thing which I see developing is definitely the offshore investments, where through rupee feeder funds as well as through LRS, you see a lot of investors who are buying offshore products. So I think that is a useful value add, but unfortunately on the other asset classes that he mentioned, I don't see much traction, not just with us, but with most of the players in the industry.
Wonderful. Sachin, you have something?
Yeah, so after you're done with all your questions, I will need last 2 minutes.
No problem. So I actually am done with the audience questions. It's just that informally, a lot of people whom I was speaking to, some RMs, they said that, at the end of the session, if you could just have Samir outline 3 traits a relationship manager should have to survive and grow in the wealth management business. You've answered quite a bit of that, but if you want to just encapsulate, it will be very useful for the RM fraternity out there.
Well, I think my answer would be the same boring answer, saying that you have to have patience, right? You have to have integrity, and you have to definitely, align your interests with the client interest. I think if you, I think it sounds very simple, and I would say that if I was to do a self-assessment with many players in the industry in India, I would say that many of them would not would fail to kind of pass the test. I also think that the reason customers become irritated with wealth management firms is because, rightly so, they find that the interest of the firm, the interest of the RM, is actually not aligned with the interest of the investor. And that is the reason I think that the steps that SEBI has taken to promote investment advisory, I think those are steps in the right direction. The only problem that we have is that, like I said, there seems to be this false notion that SEBI has that, maybe the wealth managers are making a lot of money, and that is the reason you should bring them down. But other than that, I think the business model the only right business model for this business is the advisory business model.
Wonderful. And Rakesh, I think your question, I just missed this question. Do you think bank should use this brand used to generate wealth business? I think this is the theme of the entire discussion, bulge bracket versus boutique. So I think we spent the last 1 hour actually explaining that. Thank you for your question, Rakesh. Sachin, over to you.
Yeah, thanks, Vikaas. And Samir, that was fantastic. The last points that you actually entire thing that you explained in terms of the integrity side and aligning with the investor's interests. But one thing that I really liked about, and that is why I asked for this last 2 minutes, you said that I don't work, I enjoy what I'm doing. And a few months back, my son actually helped me with a song, and which is what I want to dedicate to you. And actually that song is what I sent to my entire fund management and research team. And I said, this is what our aspiration has to be. I'll try to play this because it's very impromptu, and I hope it plays out. Just see if it's okay.
I'm on vacation every single day because I love my occupation. Hey, I'm on vacation. If you don't like your life, then you should go and change it. Hey, I'm on vacation every single day because I love my occupation. Hey, I'm on vacation every single day, every single day.
Yeah, so it says that I'm on vacation every single day. I'm on my work. place. Right?
I would agree. I'm also on perpetual vacation.
Yeah.
This has been a really wonderful discussion here. We've got wealth manager who's also a foodie. We've had an entrepreneur who's coming to become an entrepreneur because he got rejected out of private banking. You've got a CEO of an investment management firm who openly admits to his jigs with technology, and now you have a fund manager who also is a DJ. So I think
thank you. Thank you so much for a fantastic evening. Thank you.
Thank you so much. Thank you, everybody.
Thank you, Vikaas, for hosting me.
Thank you so much.
Thank you.
Thanks, everybody.
Thanks. Bye, Kamal. Thank you.
Bye.
Thanks. Bye, Vikaas. Thank you.